Cable just ripped 40 pips higher into 1.3410, while the daily chart screams strong sell. Right now, the market is handing you one of the cleanest traps I've seen this month. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end, because I'm giving you 3 exact levels you can trade tomorrow, complete with entry, stop, and target, so you are not guessing when the freefall resumes. This is not a buy-the-dip environment on sterling. My session bias is a fade. We are selling this rally into resistance. The entire structure is bearish on the daily, and this intraday pop is purely a lower time frame squeeze that will get absorbed. There is only one level that flips my bias, and it is the single invalidation line every pound trader must have on their screen right now. Write this number down. If we get a 4-hour close above 1.3467 today, the entire bearish daily structure resets, and we are chasing 1.36. Until that happens, the dollar killers are in full control. Now here's what matters about the herd. The retail crowd sees a 1-hour strong buy and gets excited. They are chasing this breakout above 1.3407, thinking it's the start of a new uptrend. That excitement is fuel for the next liquidation wave. Institutional positioning, according to the latest CFTC data, still leans net short on sterling, and ETF flows into the dollar have not slowed. When this rally stalls, the trapped late longs will be forced out, and that is exactly where we step. Let's walk the charts top down so you see the architecture of this collapse setup. On the weekly time frame, we are neutral, but the ceiling is concrete. The 50-week moving average is sitting at 1.3450, and it has capped every rally attempt for 3 consecutive weeks. That level aligns perfectly with the R2 resistance at 1.3446 and a 3 at 1.3467, creating a tight resistance cluster that acts like a brick wall. Sellers are reloading there, not guessing. Move to the daily chart, and the story turns aggressive. We have a strong sell signal that is not weakening. Price is trapped below the 20-day moving average at 1.3426, below the 100-day at 1.3442, and below the 50-day at 1.3455. The only thing that has not broken yet is the 200-day moving average at 1.3385, and that is the final lifeline for the bulls. As of today's Asian session, price is bouncing from just above that 200-day MA, but every rally into the 20-day is being sold with conviction. The ADX at 22.4 tells us the trend is not yet at full momentum, which means the strong sell still has room to accelerate. The daily RSI at 47 is not oversold, it's just weak. That means there's no exhaustion, just a slow bleed that can turn into a flush, drop into the 4-hour chart, and here's what most traders miss. The CCI is creeping up from -87, moving toward the 0 line, while price makes this tiny rally. That is not a reversal signal. It's a reset of the oversold condition that gives shorts fresh energy. The MACD on the 4-hour is still printing negative at -0.003, deeply below the 0 line. Even as candles push higher, the histogram is flat. That is a classic bearish continuation divergence. Momentum is not confirming the price bounce. Buyers are exhausted, and they don't know it yet. Now the 60-minute chart is the trap layer. It shows a strong buy, with price above the MA5 at 1.3390 and the MA10 at 1.3398, and it has broken back above the pivot point at 1.3386. But look at the volume. The move is on thinning participation, and the stochastics are already rolling over at 37, far from oversold. This is a low-conviction thrust into a supply zone. The 60-minute MA200 at 1.3385 was reclaimed, but the real test is the 1.3446 resistance. If price tags that area and stalls, the strong buy on the 1-hour will trap everyone who bought the breakout. That's the hidden divergence between the daily strong sell and the intraday buy signal, and it resolves in favor of the higher time frame almost every time. Here's the fundamental layer that gives this setup its teeth. The pound slipped yesterday despite an ECB hike because the dollar's grip is not about Europe alone. It's about the widening policy gap between the Bank of England and the Federal Reserve. The 24-hour headline screams it. Pound slips as ECB hike fails to shake dollar's grip. Think about that. Even a hawkish ECB move couldn't lift cable. That tells you the market is pricing in a dovish bow. UK data is softening. Rate cut expectations for the bow are creeping earlier, while the Fed holds firm. The 2-year gilt versus Treasury yield spread is blowing out in the dollar's favor, and that spread is the heartbeat of cable. When that spread widens, sterling gets punished. That's why the daily trend is a strong sell, and why any bounce is a gift for sellers. Now add cross-asset linkage. Risk appetite is fragile. S&P 500 futures are struggling below a key gamma level, and Bitcoin is chopping sideways, failing to hold its own breakout. Cable acts as a high beta dollar proxy. When risk turns, the pound gets hit harder than the euro. If we see a risk-off flush in the US session, the support at 1.3385 will crack like glass. My 1 to 2 week directional lean is firmly bearish, targeting a move toward 1.3300 and potentially 1.3250. The exact invalidation for this medium-term view is a daily close above 1.3520, which would break the sequence of lower highs and signal a genuine policy pivot repricing. But right now, the burden of proof is on the bulls. Here's an interaction trigger because I want to track consensus. Do you think cable breaks 1.3300 this week? Comment yes or no below. I'm tracking the crowd bias, and it's often a fantastic contrarian indicator. Drop that now. Most people skip this next section, but that's exactly where the money is made. Keep watching, because I'm about to lay out 3 sniper trade setups with exact levels you can screenshot and trade tomorrow. Setup 1 is the sniper, the conservative play. We wait for the rally to exhaust itself into the resistance cluster. Your trigger condition is a 4-hour candle close back below 1.3435 after prices tag the 1.3446 to 1.3467 zone. We need confirmation that the rejection is real. Entry at the break of the 1.3420 level on a 15-minute close, securing an early seat before the drop accelerates. The stop loss goes above the structure at 1.3475, just above a 3 and the 50-day moving average, giving breathing room above the liquidity pool where stops accumulate. Take profit 1 is the 200-day moving average and pivot area at 1.3385. Take profit 2 is the S1 support at 1.3347. That gives you a risk-reward ratio of roughly 1 to 2.5. This setup is voided entirely if the 4-hour candle closes above 1.3467, as that would break the daily lower high sequence and signal a short squeeze. Screenshot these levels now. The sniper, conservative, entry, sell stop at January 34.20, after 4 hours rejection of 1.3446-1.3467 stop loss, 1.3475 take profit 1, 1.3385 take profit 2, 1.3347 risk, reward, 1:2.5 invalidation. 4H close above 1.3467. The second setup is the active trader, the standard mean reversion approach for those who want to ride the intraday momentum shift without waiting for the full resistance tag. If you see the 1-hour strong buy lose steam and the hourly RSI dip back below 45 while price rolls over from the 1.3407 pivot, you can enter short on a break below 1.3395, which is the confluence of the MA10 and the hourly trend support. Your stop loss sits at 1.3425, just above today's high and the 20-day moving average, providing a logical invalidation. Target 1 is the pivot and 200-day MA at 1.3385, with target 2 at S2, 1.3326. Once target 1 is hit, move your stop to break even and let the runner press toward 1.3326. This gives you a dynamic risk-reward that can stretch beyond 1 to 3 if momentum accelerates into the US session. This strategy fails if we get an hourly close above 1.3430 with volume expansion. The active trader, standard, entry, sell on 1H close below 1.3395 stop loss, 1.3425 take profit 1, 1.3385 take profit 2, 1.3326 trailing rule. Move stop to break even after TP1 hidden validation. 1H close above 1.3430 with expanding volume before I give you the aggressive play. Type your cable range for tomorrow in the comments right now. I want to see the high and low you're expecting. Let's see who is aligned with the structure. Comment your range now. Setup 3 is the aggressor, the high-risk countertrend fade for those who can lose small and manage risk with discipline. If price spikes into 1.3446 in the next hour without any fundamental catalyst, you can fade the spike directly with a market entry at 1.3440 to 1.3445. This is a momentum exhaustion play on the 5-minute chart. Your stop loss is extremely tight at 1.3470, just inside the invalidation zone. Target 1 is a swift retracement to 1.3385, and target 2 is an extended move to 1.3350. This is a rapid scalping environment. You must be prepared to exit on any 5-minute bullish engulfing candle that reclaims 1.3450. This is not a set-and-forget trade. It exploits the liquidity grab above a one where stops are hunted before the real move down. Only take this if you accept the risk of a whipsaw. If the S&P futures suddenly rip higher while you're in this trade, cut it without hesitation. The aggressor, high risk, entry. Market short at 1.3440 to 1.3445 on spike into a 1 stop loss. 1.3470 take profit 1. 1.3385 take profit 2. 1.3350 risk, reward. Approx 1:2 hour invalidation. 5-minute close above 1.3450 or sudden S&P rally. Let's hit a rapid risk management pulse. Never risk more than 1 to 2% per trade. No positions through high-impact UK or US news. Stops are non-negotiable. This is how you survive to trade the next big move. Here is your single most critical level for the next session, 1.3467. A 4-hour close above that and the bearish case is dead. Below it, every rally is a shorting opportunity. Tomorrow's wildcard is the UK average earnings data, and that report has the power to break the 1.3300 floor if wage growth cools further. We will be covering that exact setup in tomorrow's brief, so do not miss it if you want the full breakdown on euro to US dollar and the dollar collapse thesis across the board. That video is live now. Tap the end screen and keep the flow going. Smash like if this gave you a clear plan today. Subscribe, hit the bell, and I'll see you in the next one.